So on Twitter, one of the traders in our trading community asked a question. And this trader asked, in a high volatility market, my playbook doesn't serve me well. What can I do? At S&P Capital, at Mike Bellafiore. Well, I actually think you're onto something very important. The purpose, one of the purposes of keeping a playbook is to understand when you're doing well, what you're doing well, and what the variables are of the trades that you're having success with. And so a variable that you want to be putting into your playbook is volatility, overall market volatility. I'm going to make a suggestion about something a little bit smarter, but that ought to be one of the variables. And so if in your playbook you're missing how the overall volatility of the market is doing, why don't you start keeping track of that? I wrote my second book called The Playbook, and the playbook, just to sort of take a step back, helps people build their business. You want to attack markets with a series of setups that you've archived, where you know the very specific variables for a setup, that you've measured whether or not you actually trade these setups particularly well. You want to know all of that, and literally you, at the end of the day, want to archive setups that make the most sense to you and compile that. And you build a playbook that sits on top of your desk. You can throw it down on your desk and say, this is my business. My business is comprised of the setups that I've archived that are in my playbook. So you're not just trading random things. You're not just trading things that you're not sure you particularly like. You're trading things that work well for you. You're going to find, and this is very common amongst traders, that setups are going to do well in high volatility markets, and those setups might not do well in low volatility markets. And you're going to have to make adjustments for those different periods of time. So volatility generally intraday is measured by an indicator like VXX. Some people like to trade other ETFs like UVXY, but it's essentially how much fear there is in the marketplace, how much movement up and down overall there is in the marketplace. We've been in a period of what? Of historically low volatility. The market, so you should be crushing it right now, Eric, because the market is at historically low levels of volatility, so you should be having no problems. But from time to time, volatility does spike. And you'll notice when volatility spikes intraday that your results may not be as good. For instance, last week, one of our traders bought a couple 100,000 shares of VXX and caught a move from above 10 to in front of 11, and made close to $60,000 in one trade. That was a very different day. Volatility spiked on that particular day, and a lot of other days it's sort of coming in. Momentum trading is going to work better when volatility is high. Fade trading is going to work better when, particularly spikes that you fade, is going to work better in low volatility markets as an intraday trader. And I'm an intraday trader. So trend trades are not going to work as well in a low volatility market. Trend trades are going to work better in a higher volatility market. In a higher volatility market, you're going to trade with a little bit lower size and play move to move more. In a lower volatility market, you are going to look for slow grinding setups that you're going to have to adjust to. They're different. One of the things that we look at intraday is something called RVol. RVol tells us how in play a particular stock is. You might look for stocks that have an RVol of over 3, maybe a little bit over 2, to make sure that that particular stock is in play. And even if the volatility is low on a particular day, if RVol is high, that's going to get your stock moving more like a high volatility marketplace. RVol, think of RVol. The other thing we look at is just the general concept of stocks in play. If something has a fresh news catalyst behind it, it is going to be something that really can follow through. You don't particularly like stocks like that, so you might stick to high beta stocks that you trade day in and day out. Very different days, very different markets. You got to adjust to them. We certainly do on our desk, and I certainly can understand why that has given you some consternation. But good thing is, lots of adjustments for you to think about.